All right, so it's really good. Welcome once again. It's good to have you here on this webinar. It's really good to have you here despite all of your busy schedules. Thank you for joining us once again this evening, I think. We have a few questions actually that is most frequently asked, be it from our social media pages or through personal engagements. And I feel we would like to start the ball rolling by going through them. After which we will be opening the floor to any questions that the audience might have. Okay, you ready? So let's begin to find out what your first investment should be. So if you see on the screen here, this first question is actually a harmless, it's a harmless question, but it's an important one. Why do you want to invest? Okay, shall we start with you, Elin?
Okay, so basically, right, I just want my money to work for me. So like I have certain goals like I want to achieve. Like for instance, like wanting a nice house, a nice wedding, now that more guests can actually attend. And I also wish to retire early. So like, if investing is done right, like all these goals are reachable, achievable, I would say. That's the reason why I actually invest. Yeah.
That's actually very ideal, right? To make money work for you. But of course, it's easier said than done. But that is why I also wish to take something from this session rather than just moderating. That's why I'm here like the rest of all of us, so that we can take away few important things from this webinar. Okay, what about you, Dhanesh?
Yeah, so for me, mainly it's because day by day things are getting more expensive. I think about it, 5 years ago, if you had $5, you could go home, you could get food, you could do so many things. But now it's just spent on transport. So yeah, so my main reason for starting to invest was really to beat inflation. Yeah.
Are there a few other reasons as to what made you start investing as well?
For me, it was also it's exciting because you always see on the news, right? This stock has gone up 10%, the market has crashed. All these kind of things are very exciting. So yeah, sometimes to capitalize on it can be quite fun. Yeah.
Back in school, I always ask myself, why are we doing a lot of like maths and all everything? But I do feel like it helps us, especially in these times when we are about to dive into the world of investing, And now, Elin, I want to ask you, second question is, who actually influenced you and opened your eyes to investments?
Actually, it's my mom that actually influenced me to start investing. But since young, she has been actually educating me on financial freedom. Like, in fact, I actually remember this line she always repeat, like play on repeat, poker recorder kind. If money doesn't work for me, I will work hard for money, like for life lah. So that's the reason that got me into investing.
If money doesn't work for me, I will need to work for money for life. Is that correct?
Yeah.
Okay, I will remember that line too now. Thanks to your mother and you. Wow, that is quite an impactful reality check. And what about you, Dhanesh? Did you ever get some sort of reality check like this from someone close to you, say your friends or family?
Yep.
Or even
for me, growing up, I saw my grandparents investing in shares, and it wasn't it was a roller coaster ride lah. Because a lot of times they get excited when they buy a good share, they make profit, but more often than not, it was a loss lah. So that really scared me about buying shares and stuff or investing in general. Yeah, but when I started doing my bachelor's in finance, I started to get more informed, and I realized what mistakes they might have made. And so now as an advisor, I'm able to use that to help my clients better. Yeah.
It's really heartwarming to hear that people really close to our hearts, like your family, inspired us to invest. I find it fortunate that you were exposed to this from such a young age. Also, they might have also wanted to pass it down to the next generation as well, for you to pass it down to the next generation, besides making sure you have enough for yourself. So I guess it's then fitting to ask this third question, which is, Dhanesh, I'm asking you, what do you invest in, and how is your investment journey so far?
Yeah, that's a very loaded question. Yeah, so when I first joined the industry as a young advisor, I bought an investment-linked policy. So I didn't have much capital and I wanted to start, so I just started small. Yeah. So as I joined Phillip, I started getting more into stocks and shares, ETFs. Yeah. And journey-wise, I think I've learned the most from my clients because not everyone's the same. Everyone has different needs, different objectives. So as I embark as an advisor, I've been able to customize solutions for them, which has really matured my outlook on investments. Yeah. And also my shift from being a tight advisor to being in Phillip now, where I can advise on a multitude of product classes, has really contributed to this holistic view that I have now. Yeah.
Right. So it's awesome actually, hearing you grow and mature through your investment and credibility through advising your broad spectrum of clients. Now, I think it's time for us to pick Alvin here on his investment journey through his vast years of experience. Alvin, would you mind sharing?
Yeah, hi. I think I kept quiet till now because I think I'm the oldest, right? So I let the younger one talk. So about
Give the
when
spotlight to
when
the
they
younger
start.
ones.
Yeah, because I've personally invested since school days, and that's like only like 1 year ago, right? So no, like I say joking, I'm over 20 years ago. So during my uni days, I really start to buy shares. Right now, I invest in quite a wide array of assets. When I just started, I like to pick shares because I'm also from business school. So I even told my CFA, and I think I can be a good stock picker. Also I think I also read a lot of books. If those people around my age, around 40 plus, they'll realize that there's something called the share investor book. Inside they have a whole stack of what are the shares in STI. So as I progress further, I also put up a regular savings plan, like ILP plans, investment linked plans that's tied to insurance. Then I also have unit trust. And in a nutshell, I just like to just say that if you invest in shares, make sure that you put them under a custodian like Phillip. One of the most common thing I know is if you want to really know you want to make money, you need to put it under a platform where you can see that you're actually making money. Many people I know basically they are actually in a state of denial when they come to investing in shares, especially shares. They will just tell people that if the shares go down, they'll tell them that it's actually a long-term investment. It's not counted. I'll wait for you to recover. And the winners, they'll take money very fast and tell the whole world that they make money and they are like the next guru, right? So this is fine for 1 year, but can you imagine for my age, if you invest over 20 years, your whole portfolio probably look like a whole group of losers stock that you keep, because you keep the losers and you sell the winners. So this is very common in my line when I manage customers' money, especially when they do DIY. I see a whole portfolio of losses when they do it, but they keep take the money out of winners. So this is something I like to highlight. So by putting them under custodian, you basically can literally see whether you are making or losing money. Why do I say that? Basically simple. If you find that you're not making money, then or you're not as efficient as you think you are, then just buy ETF. Or there are reviews of top fund managers around. Just do some research and just park your money with them. You'll be surprised that over a period of 5-10 years, they are literally making maybe even doubling your money over the past few years. Okay. Then recently I also got into crypto, but saying that I only buy the top 2 crypto. At my age, I think I only want to invest in instruments that I'm more confident about. So needless to say, they are Bitcoin, Ethereum. Personally, I always feel that if I could achieve an average of 10 to 15% per year, I'll be satisfied. Yep. That's all for my sharing.
Thanks for the sharing, Elvin. I expected nothing less. Of course, it is important to know and keep track of what we are investing in, right? And which is why Elvin actually emphasized that trusting your investments under a custodian like Phillip Securities is very pertinent in investing. Okay. Interesting sharing on crypto as well. I'm pretty sure we'll have some questions from the audience related to that when we open the floor later. Now we shall go back to Elin for our fourth question. All right. So, care to share any mistakes or dear lessons you have learned through investing?
Probably I would say to diversify your portfolio. Because before joining Phillip, I was with a life insurance company. Then my mentor there actually taught me about putting my money into real estate investment trusts. Then when the property market went down, my portfolio went down with it as well, like together. So I realized that actually I failed to diversify my portfolio by going into a single sector investment. So that's a lesson that I actually learned it hard.
I guess the age-old saying is true then. Never put all your eggs into one basket. So what about you, Dhanesh? What are any mistakes you have
for
made
me,
and what have you learned from them?
Yes, correct. So for me, it was exactly the same. As much as I diversify my clients' portfolios, mine was overly concentrated either in shares or in a few areas. So yeah, when the market corrected last year, I saw a few losses. Same problem. Yeah.
So to our audience here, I think we can safely say that diversification is important. Safe to say also that your learning journey never stops to expand your views and knowledge so that you can cut losses and avoid painful mistakes. So to cap off our list of these frequently asked questions, I wish to ask them, what advice would you actually impart on our participants? Elin, can we start off with you again? Care to share?
Okay. I have three advice for a new investor. So the first one will actually be thinking of investing as buying a business, not like buying a tradable securities. I think nowadays people are like into like trading, thinking that that will actually get you a lot of money lah. But I feel that an important part of investing is to remove the emotional stress caused by actually watching the price daily, the movement daily. So let's say if you're a long-term owner of a company, the day-to-day movement of the stock price can be extremely frustrating when it's not going to your direction. Instead, you should view like the change of stock price every day as an opportunity to buy the companies that you like at a discount. So for instance, like let's say your favorite TV on like whatever platform is it, there's on sales, like will you go panic like, oh my god, it dropped by 25%? You won't, right? You'll probably go on and, oh yes, 25%, I should buy it now.
Black Friday.
Yes, Black Friday sales. So investors should actually view like stock price or unit trust price the same manner. Like assume there's no change in fundamental of the investment of the company wise, but like investors should always welcome lower stock price as an opportunity to buy more of the companies that they like. So going back to the second point, which is actually dollar cost averaging, like related to the point one. So if you look at S&P 500, right, if you stay invested for like 20 years, the returns will be at about 6% to 8% per year. But like, the whole graph like looks really scary because it's like up and down all the time. So if you only buy it at one price, the up and down of the market could have affected you. So, but if you were to buy at different price at the whole time, you can actually benefit from dollar cost averaging. So the last advice will be actually, if you don't have time to research on stocks properly, reading the market and things like that, right? Invest in ETF or unit trust. Like what Alvin shared earlier on, like getting a fund manager to do their job, that kind of thing. So like researching all this can really be time consuming, and not everybody is like really interested or people have time for that. So let's say, if you're not willing to commit the time to actually do the research properly, it's actually safer for people to actually go for passively invest in ETF or unit trust. So that's just three advice from me lah.
Oh, wow. That's a lot of important pointers in the sharing. Thank you for that, Elin. So just to recap so that it stays in a part of our mind, first, think of investing as buying a business. And second, like you mentioned, dollar cost averaging, important words. And third, passively invest in an ETF, right? So now, Dhanesh, what advice would you like to impart to the audience tonight?
My advice is quite simple. Just get started. Yeah, because we always worry that just get started. Because a lot of people, in my experience, a lot of people tell me that before I get my first 10,000, then I'll invest, like 100,000, whatever. But in reality, the smallest head start that you have will always do you much better than starting later, only because of compounding interest. Yeah.
No need to worry
As
too
surprising
much,
as it, don't worry, just get started. Yeah. As surprising as it sounds, it really trains your discipline in staying in the market. Yeah, because it's always your time in the market is way more valuable than time in the market. Yeah. So yeah, save your money regularly. Yeah.
Very
And as
important,
Elin
right?
said, it's also dollar cost averaging. Because when the market is low, you buy cheap. And when it's at the top, you can buy more or you can take profit. Yeah. So these
Dollar
two.
cost averaging. So dollar cost averaging seems to be the advice to hit. Yeah, of course, if you wish to understand more, you can always reach out to Dhanesh and Elin. I will definitely be sharing their details on the so that you can contact them. And now I think it's also fitting that lastly we get the advice from someone with the invaluable experience and credentials and maybe something a little more. Alvin, please.
Yeah, thanks. Again, I think my experience comes from working with my clients and also seeing somehow how my clients perform over the years. Basically, I like to share two pointers. Simple one. Firstly, begin with the end in mind. Actually, if you want to have 1 million in 20 years, it's actually quite easy. You just work backwards and just find out how much is needed and at what rate, and obviously what are the options available. For example, if you want to put everything in the bank, 1 million divided by 20 years, divide by 12 months, and that's the amount you need to save. It's quite easy, right? So, but if you want to realize that it's too much, then let's look at another rate of return and how much you need to save. So basically, working backwards is very, very important. Okay, sorry, I think there's somebody
is has got the mic on.
Okay.
All
Oh,
right,
okay.
thank you.
Okay, so actually it's very easier said than it's actually much easier than what you think it is. But obviously, if you've got 2 years to want to hit that $1 million, it gets very, very, very tough. Okay, but with 10, 15, 20 years, I think today's topic probably attract a lot of new investors with a long runway. So think about it and do the calculation. If you need a real return of maybe 8%, and that's where your homework starts. You know, it's like doing maths. You calculate the number already, then after that, you go and find the ingredients of how to achieve it. There are a lot of advice online, and there are also advisors around that you can check with. Second one, which is actually more important, basically asset allocation. If you do your finance degree, or everybody talks about asset allocation, you need to properly spread out across different instruments so that like what people say, if the thing drops, not everything drops, or even it drops, it can drop. Some drop at a slower pace, or some drops very, very fast. Actually, over my 20 years, I can tell you that I've seen less than 10 people around me who doesn't use asset allocation and hit their million, which means that they pick 1 or 2 shares and they hit their $1 million. There is really some of them, but it's very, very few. It's definitely less than 10. They pick 1 or 2 stocks. And I got a good friend who did it over the last global financial crisis, 2008-09. He picked 1 stock and the thing shot up and he became millionaire straight away.
Wow.
Last year also have a few, but these are really one in thousands of people I deal with, a few in thousands that I deal with. Even recently, if you look back and talk and you read about so many billionaires investing in crypto, right? But if you think about it, who around you actually hit their $1 million investing in crypto? What you hear is always those few stories, those few heroic stories. So I think end of the day, asset allocation is pretty important, because if you are disciplined, you can basically hit a very controlled return of between 5 to 15% over a rolling 5 to 10 years period. Yep, I think that's all I want to share. Thank you.
Alvin, thank you so much for this investment advice that's truly worth its weight in gold. I'm sure you would like to build up upon some of the pointers. I see that you probably have a bit more to share. So I think before we actually open the floor, to questions from the audience, since we are already done with compiling all the FAQs that we've got from our different mediums. And also, since we are fortunate enough to get you and Dhanesh and Elin out of your busy schedules, I wish to ask if you would like to build on a few pointers to share, be it on the current market outlook or your strategy, for the benefit of everyone that is in attendance.
Yes, I have. Actually, I wanted to share something actually even more exciting. At the end of the day, when people talk about investment, they always say, when do I put my foot in? Actually, we are living in these times where it's better to put your foot in. Allow me to share some of these hard data slides to let you make a better decision.
Yep. Right, I'm going to stop my sharing, and you can share your slide.
Okay.
It's good to see everyone joining us this evening. Hopefully, we are able to get something out of this first investments webinar talk. So, for those of you who just joined us, probably about 10 to 15 minutes ago, no worries. We have this session recorded on Facebook Live as well. So you can easily access Facebook. I'll share you the link later on for our Facebook page, PhillipCapital Advisory. And those of you who missed out the first part of the FAQs that we shared, you can go and watch the Facebook Live video. I'm pretty sure it will be like posted there from tomorrow onwards, so you'll be able to see the full video. So don't worry about missing out anything. It's good that we have all of you here joining us on this Thursday night, trying to learn something from Dhanesh, Elin, and Alvin. And me, even when I'm moderating, I'm also here to learn something from Alvin myself. I'm also a first investor myself, so I would like to know, like, what is it? Which step to first investing should I take? Yeah. So
hi Nabil. Is it possible you share my slide?
Oh, okay, sure. Just give me a moment. So Alvin wishes to share something a bit more. He's got a few slides to share as well. So let me open up his slides. Give me a few minutes.
I'm sorry, some scrotty issue with my slides.
No problem. Sorry for the slight technical issue.
Able to, Alvin? Should be okay already.
No, I think it's my computer actually. Sorry.
Sorry about this. Okay, opening up the slides now.
Hi, sorry for the technical issue. So I have to use voice control, and Nabil will help me with it. Basically, I like to, this is basically something I shared a few months back, and I think it's still the same. It's basically the time is now. Okay, anyway, before we start, let's go to the next slide.
Is the one?
Nabil, are you helping me?
Sorry, There seems to be a technical error here. Sorry, one.
Also have
I also think from my end. Okay, are you able to see the slides?
Yes.
Okay.
Yeah, we can see, we can see.
Yeah. Okay. Able to see now?
Can you start a slideshow?
All right.
Okay, before we start, I would like to just go through a few maths. Again, as you can see that I like maths a lot. Okay, next. Okay, how do we amass wealth? Okay, next. Okay, let's say you earn 5,000 a month. You can just click and you spend 3,000 and you invest the 2,000 over 10 years at 10% per annum. So at the end of 10 years, basically you keep the investment for another 10 years at 5%. Basically, this person at the end of 20 years would accumulate around 685,000. Okay, next. Let's say the person earns 15,000 a month, spend 6,000 per month, and invest the rest for 10 years at 10%, exactly the same. At the end of 20 years, the person will have accumulated 3 million. What I'm trying to say is basically, other than time in the market, the more important thing is, next. Earn now, not later. This is basically something I always emphasize. Since you're young, the number one thing to do while you're brushing up your investment skills is always to earn as much as possible when you're young. Because as you grow older, more and more things are being, you've got more expenses. So when you're young, try to earn as much as possible. Next thing I want to ask is basically right now, who is and are your financial advisors? You can be Google, you can be personal advisors, things like that. Do think through, because there are a lot of advisors now and there are even more products. So make sure that you don't stick to one advisor and actually consult a few before you make your decisions. Next. So why now? Basically, when I talk about investment, you must look at a few things. Basically, the demography, market cycle, and technology. Next. Let's look at demography. Basically, for a stock market or investment to go up, right, you basically need the demand and you also need the money. And let's look at what's happening now in this world. Okay, we are living in a world where everybody is aging. So you realize that the older group of people, they're actually investing more and more, and they are actually going towards instruments where they give them income. Okay, so this is one very, very common trend. Next. And also with healthcare and all these costs going up, you realize that, and the government, you look at it, everybody is talking about investing now. So right now, you're talking about putting in the bank, it might have an issue because everybody is trying to deploy their funds. Okay, next. Next is we need the money. Look at Singapore. I think this is old news already. This is on June 23rd. The number of millionaires in Singapore is 437,000. Basically, if you're not a millionaire, you are actually a bit behind. And what do these millionaires do? They are actually actively deploying the money. So just now it comes back to we need the money, right? Because let's look at any investments. If you don't have money, the stock will never go up. Right now, we are having a very, very big amount of cash in the market. Next. Our favorite topic in Singapore. This is actually old news. I did this talk a few months ago, and I think as of now, the property has gone up further. Last week, I think if you were to look at the new property launch at the former Liang Court, is I think 60 to 70% sold. And you're talking about the average PSF over there is 3,000 PSF. So you can see that actually there's really a lot of money in the market. And one thing is for sure, they're not putting in the bank. They're actually letting their money work hard for themselves. Okay, next. Okay, and this one is again very old news. When I showed this a few months ago, COE was 40,000. I think now you all should know it's 80,000, right? So even you look at it, you can can be very sure that actually there's a lot of money in the market now. What that's not being invested is actually being put into even assets like, I don't even call them assets, but anyway, they are called cars. Like we have the most expensive car ownership in the world, and it doesn't look like it's going down, it's actually going up. Okay, next. So the next one is also on market cycle. Like what? Okay, when I graduated in 1998, I lived through the worst market cycle ever. If those people who are around my age will probably know. Asian financial crisis. 2000 is a dot-com crisis. 2001, there's a Twin Tower bombing. 2003 SARS. 2008 GFC. 2011 European crisis. I lived through 10 over years of crisis in my first 10 years. So if you look at the past 10 to 15, the past 10 years, actually we are in a very good cycle where it goes up. Even anybody who throw the money in, more likely than not, they are making money. So actually, are we in the correct market cycle? That's very important when you do investments. We need the market to be going up, and we also need people to be interested to grow their money. Right now, it seems like we're having both. Next. Why is that? So basically, number one, technological breakthrough is really big now. We are not even talking about internet apps. We are now even talking about metaverse. We are literally going into a new era of technology. The talk of the COVID actually caused people to think more about climate, which is quite interesting. I could never find the link, but now you're talking about ESG investments. And of course, the easiest one is, of course, the demography growing old. As people grow old, they start to deploy more of their money into investable assets. That's always the common trend. Okay, next. This is again old news. The last time I give a talk about investing right now the market has gone up even further. Next. And of course, the favorite topic among the youngsters, crypto. You start to realize that crypto and everything seems to be going up and at a very exponential level. So when you have all this money flowing all over the place, you do know that there's a lot, again, back to what I always like to emphasize, there's really a lot of cash waiting to invest. Next. So the need to interest to grow money. Yep. Why do people start to invest like crazy now? Because even my oldest customers now, those who put fixed deposit year on year, right? They couldn't stand the current interest rate now. To them, it's really too painful. 0.6% to 0.8% per annum for fixed deposit. And as you know, our inflation is not even 2 or 3%. I think it's a bit more than that right nowadays. So that caused everybody to be looking out for opportunities to make money. Likewise, for the people who attend. Okay, next. Yeah, this is inflation forecast to grow 1 to 2%. I think it's way above that now. Next. Okay, this is something that's done by Phillip. We actually measure the amount of money by the sideline. This is something that our research we do. There's really a lot of cash. Even when this is why is this important? It's very simple. If there's also a lot of cash by the sideline, you only mean that if the market were to crash, this money will go into the market. Okay, and that's what happened during the COVID situation last year, where the market have a free fall and very fast. The monetary policies actually push the whole market up in a V-shaped recovery. Those people who managed to catch at the bottom and holding on to today, they probably made probably 3 to 5 times of what they put in. Next. Okay, next is technology. This is something that I like to talk a lot about. Is it a friend or is it a foe? I think this is something you have to think about it, because for the older people, it might sound like a foe. But look at what technology has done. Now we have robot advisors. We have so many trading platforms. We have online, you can buy anything. You don't talk about financial instruments. You can buy, now you're talking about buying NFTs, if you don't know what they are. And also There's also Google for you to Google and research what you need to do. So the opportunity to make money now is really much, much bigger than what is happening in the past. Saying that, of course, I want to promote a little bit about what Phillip can offer. We are basically the most comprehensive platform in the market. If you look at what you can offer, we have shares, ETFs, bonds, unit trusts. We also have life insurance, and we are probably one of the most mature application in the market for advisors and customers, and many, many more. In fact, today we have a new training. Oh yeah, something that a lot of people didn't know, that we also do insurance. And this product, 1.8% per annum, was launched at 12 a.m. and it was sold out at 10 a.m. or 10:30 a.m. the very day itself. So yeah, things are going off very, very fast because there's so many money by the sideline waiting to park somewhere. Next. And of course, I just go through very fast. Nabil, just forward. These are obviously all the promotions that we have on Phillip. We also have our own robo-advisors. So with that in place, I think I shall end it. Sorry for the technical glitch. Okay, I always also like to highlight that if you like to invest money, you can also join us in a team where we learn and grow together. Again, I'll be back to you. Thank you.
Thank you very much, Alvin. So thank you for your in-depth sharing, and allow me to then share my screen back again. Yeah. Okay. So thank you once again, Alvin, for your in-depth sharing of the hard facts and figures and why the right time to start investing in even in the capacity of a practitioner in the finance industry is now. So as promised, now we will open the floor to questions from the audience. Do type out your questions in the chat box, and we will address them accordingly. Dhanesh, Elin, or Alvin will be here to address all your questions and all your burning queries. Also, do please take note of our speakers' details. As you can see here, as shown on the screen, take a photo of it, yeah, and take a screenshot of it, and feel free to reach out if you are not able to. Just to check, you are seeing the details on the screen now, right?
Yes, yes.
Right. Okay. So feel free to reach out if you are not able to get your if in the event you didn't get any questions answered, if we are running out of time, or if the question is a bit too technical to be discussed in this space, you can always reach out to Elin, Dhanesh, and Alvin. I would also like to take this opportunity to inform you that the advisory practice is expanding, and if you're looking for like-minded individuals to join this team that's bursting with passion and youthful exuberance. So if you're looking to join the finance industry, or if you know of anyone who wishes to join, please feel free to reach out to either Elin, Alvin, or Dhanesh. And me as well, I'll be sharing my contact details in the next slide, and we will be able to guide you through the process. So as mentioned, these are my details. My details are also here, like if you wish to know about more opportunities in the wealth advisory sphere. You can scan the QR code if you wish to access our entrepreneur website, where you'll be able to see the opportunities you have at your own time. And we're also on Facebook under the Phillip Wealth Advisory handle. Okay, if you were to look at this job shadow program advert that I have on my screen right now as well, if you wish to experience what it's like to be part of Alvin's team as a financial advisor, this job shadow program is for you. Okay, it's the first of its kind in the industry, and it comes without commitments. So do scan the QR code you see at the top right-hand corner, and if possible, share this opportunity with whoever you feel might be interested, and we will contact you accordingly. Okay, so I'm going to share this screen again, while we take questions and we'll answer them one by one. Okay, we've got some questions on the chat box already. The first one would be, what do the advisors think? It's a general question across the three of you. What do advisors think of NFTs? See, I told you already, all the crypto questions will come out already. So what do the advisors think of NFTs? Is it a good investment? So who would like to take this question?
I'll take it. I'll take it. Personal interest. Actually, to be honest, I asked my children to study about NFTs. They're actually in primary school, and the eldest is 13 years old, because I actually believe that it is going to be part of the future. But coming down to whether is it a good investment, first and foremost, I want to say that we are not licensed to advise on NFTs. So whatever I share is probably very, very personal and totally nothing to do with Phillip and obviously our industry. NFT by itself, they are not licensed under NAS. It's basically it's very, very hot now. People are just buying, and as of any thing that you buy, you have to know what you're buying. That's all I can say. I have friends who invest in NFTs and they made a lot of money. But if you were to ask the reason why it goes up, if you ask me honestly, I think I believe is the word. I believe this and I believe that. There's no hard and fast rule about it. But saying that, NFTs are collectibles, right? So I'm sure you all read the latest, the most famous one, the $67 million painting. So it's basically a collectible in this space. You can have no fakes, very, very concrete evidence, because all of them have a number, right, to show that this is the real thing. So the value would definitely be retained. Or you wouldn't say the value will be retained. You would say that you can only have one original in the NFT world. I hope that answers the question.
This was a question by Wei Yan. Thanks for asking this question. We also had a chance to learn a little bit about NFT. So hope it answered your question, Wei Yan. The next question that we have is the knowledge of TA essential before investing in stocks?
You want me to answer that too?
It's a question by
Okay.
Joshua.
I think I'll answer this one. I'll skip the third one. I think my colleagues, my team can answer. Okay, TA essential. If you ask me personally, the answer is yes. Okay. In fact, a lot of my fellow colleagues in Phillip, we use TA and fundamentals very closely. Why do I?
Sorry, Alvin, for the benefit of those who probably just joined and don't know what TA is, should enlighten them a bit what TA is? Yeah.
Technical analysis, right? Looking at the charts. Yeah. Personally, I use them quite a lot to determine, because fundamental analysis has one issue, and that is, if you know about it, are you sure that you're the only one who knows, or is it old news or new news? Correct. So I do use TA to have a general feel of what is the market thinking about. So yes, to put it simply, my answer is yes. I do look at TA to make my investment decision. One very, very practical example is Alibaba. I'm sure those people who do TA in investment will have short Alibaba instead of buying it. Correct? While the fundamentalists might have bought it when Alibaba is going through a free fall. And if you were to do it, I think Alibaba probably more than half in value from the all-time high. And everybody knows that Alibaba is still a very strong company. But in TA eyes, it's a no buy for now. Okay, I'll stop for this question. I let other bit. I think the ETF part, I think they can answer.
Thanks, Alvin. So, okay, this is a question from Josh earlier. I hope Alvin more or less answered your question of the knowledge of TA being essential before investing in stock. So there's a question from Nisha now. So she saw some mention about ETFs. Okay, so she was reading about them a bit and was confused. So Nisha wants to know a little bit more about ETFs, about what they are. So, who would like to answer this question?
I can take this one. Yeah. So an ETF is basically a basket of stocks. So if you look at the stock market, you're going to buy Apple, one share. Let's say it's $100. You need $100 to buy one share. But with an ETF, you get exposure to the entire market, which is, let's say, the top 500 companies in the entire market. And you buy a share of each company in one instrument. So with that way, you achieve diversification. So if the market ever drops, you won't be affected by just Apple dropping. So like Alvin said earlier, some companies might drop more than others, some might drop less. So in that sense, if the market goes down, your investments are protected in that way. Yeah. So you get exposure to the product. Yeah, I hope so.
So Nisha, I hope Dhanesh managed to answer your question. Of course, if you wish to know and talk to Dhanesh more about ETFs, his number is right here, his email is right here as well. You can contact Dhanesh and can know more, learn much more about ETFs from more than the short sharing session. So we'll take the next question. This question is from Sam. So did Alvin's friend use leverage during the 08 GFC to get his million? Would the three advisors be expecting an hyperinflation environment anytime soon? So this is also
this Alvin's friend one, I guess, have to be answered by Alvin. So okay, yes, Sam, you're very smart. He did use leverage. In fact, in the beginning, we were quite fearful that he will bomb out because the market had a very big free fall, and that time they were talking about banks collapsing. He did use leverage to keep the storage very short. But there's also one very good lesson learned during that period was getting your leg in first will probably give you the biggest opportunity during a crash. Why do I say that? We have a lot of very, very intelligent people among my friends, wherever. A lot of people didn't go into the market at all. They are waiting for a market to crash and crash. So, and that didn't happen. You also have quite a bit of a V-shaped recovery, right? So this friend of mine literally catch the end and zoom all the way up, and with leverage, he hit his millions. So I hope that answered the question. Next one, three advisor. Okay, since I'm the one talking, I'll start with I'm the first advisor to answer. Hyperinflation, I think there's a chance that it might happen. I do think that the government might come in to raise interest rates to at least scare the market a little. Hyper is a very broad-based number. I think maybe you can chat with us further on what is a hyperinflation environment. That's for me.
What about Elin and Dhanesh? What do you think about hyperinflation?
My answer is similar to Alvin. I think at the end of the day, government's monetary policy will always affect inflation. Yeah, so even if it becomes borderline hyper, I'm pretty sure one way or the other interest rates will go up, or one way or the other monetary policy will affect curtail inflation.
Okay, looking at the time that we have up, we will go on to the next question. I hope your question was answered, Wei-Yen. Sorry, this was Sam. Yeah, hope your question was answered, Sam. And we're going to move on to another question by Wei-Yen. Thanks for your question. Does the financial advisors think that cryptocurrency is the future of currencies? Well, this is also quite a loaded question. So who's going to take this one?
Maybe I can take this question. Right. Yeah. I mean, like Alvin mentioned, we are not licensed to actually advise on cryptocurrency. Yeah. So for what I'm sharing for is just like my own personal opinion. So I'm saying that I'm thinking that probably, but I don't think it will be anytime soon. So maybe we are talking about yeah, don't quote me, guys. So like probably I'm thinking like in like maybe 30 years time, because like as of now, I think everybody should know that, the regulations. Like recently, MAS actually like closed down Binance in Singapore. So like many other countries, they are also actually regulating on cryptocurrency is like illegal and things like that. So for me personally, although I do buy in, but like I don't actually think that it will be anytime soon that is actually a future for currency wise. But I think it will take some time because like after all, they need to find out what are actually all these things about before they can actually allow it to be like a real currency. So that's what I think lah.
Thanks, Lynn. Thanks for your sharing, and thanks for providing the answers to the questions that our audience had so far. So we've still got a bit more time. If there are any other questions from the floor, please ask away. Our distinguished guest here will be more than happy to answer the questions that you have and all the any other burning inquiries that you have. So please don't be shy to place your questions in the chat box and we'll address them. Hey, we still got time. We still got like 2 minutes. Once again, I'm sharing their details so that you are able to get in touch with them. And if you wish to know more about investments, and please just feel free to contact them. Okay, do we have any other questions? Once again, I wish to share that if you are looking to experience what it's like being a financial advisor in Alvin's team, which is the advisory practice, feel free to check out our Job Shadow Program 2021. Actually, this Job Shadow Program is the first of its kind in the industry. Okay, just to tell you a bit about what it entails like, it's done virtually, of course. In these times, it's done virtually and not physically. So it will be 3 days and it will be just 2 hours a day. Okay, that's why it's a good experience to have. Of course, if you like the program, you can even lengthen your 2 hours. So you can even stay for more than 2 hours a day and to go about what it's like to be a financial advisor, you get to experience this. Yeah. So at any time you are ready to start, you can just log on. You can just scan the QR code and you'll be able to check out this Job Shadow Program. And do contact us. We'll get back to you as soon as we can. So of course, do scan the QR codes you see as well to access our Phillip Wealth Advisory Facebook page as well as our entrepreneurship website.
Yeah, Nabil, there's a new question. Yeah, there's a new
question.
Yeah.
So what advice would you guys give to new investors? ETF, unit trust, or just safely stay in robo-advisor? Getting the help from robo-advisor.
Okay, maybe I can give some advice because this question is actually quite common from my clients. So what I would say is once again, you diversify your portfolio. It's okay for people to go into robo-advisory. There's no right or wrong. There's no actual correct or perfect guideline. You do according to what type of instrument you are actually comfortable with. So for instance, let's say you feel comfortable with ETF and things like that. So you go ahead, if you feel you like to try to do stock picks or whatever thing, yeah, go ahead. Don't try to limit yourself or thinking that there's actually a right recipe to follow. That isn't. To me, I feel that it's always going to somewhere, an instrument, a platform that you're comfortable with to actually try out buying ETF or buying unit trusts or buying stocks. Or even with robo-advisory, if you are happy staying with robo-advisory, go ahead. Nobody's saying that, no, that is wrong or whatever thing. And nobody's saying it's right or wrong. But even for crypto, I always tell my clients you can actually try to explore, diversify a portfolio, or even doing crypto a bit, doing a bit of this and that, diversify them out. We are still young in a sense, even for older folk or everything, yeah, just diversify them. So no matter which sector or which market actually went down, your whole portfolio doesn't went down like mine previously. So once again, there's advice I will share with them, diversify out everything.
Thanks, Elin. Dhanesh, you wish to would you like to provide some advice to this as well?
I would say the exact same thing as Elin. Just get your toes wet. Just try whatever you can. ETFs work for you. You need trust, whatever. If you always need advice, we're always here. But just dip your toes, lah. See what excites you. Yeah.
Thanks, Dhanesh. Thanks, Elin, for your sharing. So we've got a new question from Robert. I've got like a few more minutes. We can take about 2 or 3 more questions before we end this session for this evening. So Robert Lowe is asking, how about CFD then?
I'll take that. Contract for difference. This is a very, very high risk instrument. I've seen people go bankrupt using this, especially with the very big gap down. So when you trade CFD, just be careful of the risk, as I said. And there are also CFD, you might run into an open position where you are just exposed. Even for advisors like us in my previous place, the advisors also got put into all these credit risk issues, because if the customer goes bankrupt and things like that, you literally, some of us have to bear the risk of the loss. I mean the loss. So this CFD is very real, and the risk of going bust and going boom is there. Just do your homework on that. Even advisors can't advise you on CFD because it moves too fast. Josh, if the stock price breaks the 52-week high, or he's a very technical person, does it mean it will be a new support line and likely to rise higher? There are a few other indicators that myself, I look at. If it breaks the 52-week high, does it go higher? More likely than not, it's yes for me. But again, if you can ask some of my very experienced colleagues, they will have a few more confirmation TA indicators before they can say yes or no. Some is a very weak break. Some are very strong spikes. So again, come down to the skill level. We always call the TA people, they are like Kung Fu masters. You hear them talk. Philip has TA webinars every Monday afternoon. If you would like to hear them talk, you will talk about all the range and everything. So, yep, I hope that answers your question also.
Thanks, Alvin.
But one thing for sure, I will not sell when it breaks the high, because I would like to ride the wave.
Ride the wave. Thanks, Alvin, for sharing, and thanks, Josh, for asking the question for the benefit of everyone here. So we've actually come to the end of our session. As I mentioned, we wish to keep it within 1 hour. But of course, if there are more questions, any more questions that you guys would like to ask, I'll give this 1 or 2 minutes for us to answer like just 1 or 2 more questions. If there are no other questions, you see Elin's details, Dhanesh details, as well as Alvin's details on the screen. You can screenshot the screen, or you can save these numbers and you can reach out to them and you can ask them whatever inquiries that you have, as I mentioned earlier. So do we have like any other last questions before we close this session? All right. So I don't think we've got any other questions. So once again, I wish to thank everyone for joining us this Thursday evening for this Ask Me Anything webinar, or what should your first investment be. And thank you once again to our esteemed guests and speakers, Dhanesh, Elin, and Alvin, for taking time out of your busy schedule to join us and to educate us this evening. I hope we've gotten some pointers, we've gotten some takeaways from this evening, and I hope you do also join us for future Ask Me Anything webinars. Do watch this space, and do of course contact Alvin, Elin, and Dhanesh if you wish to know more about what your first investment options might be. So thank you very much once again, and stay safe, and we hope to see you soon sometime. Thanks, Alvin. Thanks, Dhanesh. Thanks, Elin. We're gonna end the session now. Right? Thank you, everyone. Good night.
Thank you.
Thank you, everyone.
Thank you.
Good night.
Thank you. Bye-bye.
Thank you. Good night.
Sorry, just one more thing I wish to add for those who just joined in and you've not missed quite a bit of the session. We are available on Facebook Live, of course. This session is recorded on Facebook Live. So you can go to our Phillip Wealth Advisory page here to see. Right? So thank you once again and have a good night.
Right.
Bye-bye.